All right, so we're going to jump back in here with chapter 10, setup 3, shorting a halt resumption, and this is going to be some fun stuff. The shorting halt resumptions, and we already saw an example of it. I think it was at some point in chapter 9, but for those that maybe didn't watch that particular section or that setup of that chapter, you'll see it again here. So basically, this is, this is as close to a like guaranteed home run as it gets. The problem is that there's so much risk in trading these types of stocks. However, when you get that first halt going down after 5, 6, 7 consecutive halts going up, they almost always drop a lot and gap down. And this is what you see here on LFIN. It squeezes from 40 to 60 to 80 to 100, 110, 120, $143, and then it halts going down around 128 and resumes at $60 a share. For that setup alone has me half willing to fund an account at one of those brokers that has crazy, availability of shares to borrow. But the problem is, most likely, because this was a continuation stock from the previous day, most likely you would have had to be up at 5, 6 in the morning to reserve your shares, just to even reserve them, right? So those shares would have gotten reserved really fast by traders who know the potential. So then once again, you're paying the money out of pocket to reserve the shares, even if you don't use them. If it ends up just fading the rest of the day and not doing this setup, it's not like you can just reserve them when it starts going parabolic, because by this point, the shares are gone. They're all gone. You've lost your chance. So that's kind of the problem. And rarely are these squeezes on stocks that are easy to borrow. So this is a reversal out of a halt. This is a very high risk, high reward setup. And again, just to disclaim, me saying that this is the closest thing to a guaranteed home run it's not any guarantee of any success that you'll achieve trading this strategy. You could still certainly lose money trying to trade this strategy. My experience has just been that after this number of consecutive halts going up, the first halt going down, it's a big deal. So after several halts going up, we often begin to expect a halt coming down. And sometimes that can be even after just 2 or 3 halts going up. After 2 or 3 halts going up, we start thinking, the likelihood of a halt going down is starting to increase. Usually we talk about liking to buy stocks, sometimes they halt straight up. You didn't get in before the first halt. That's okay. I'll buy after the first halt, going into the second halt, and often I'll hold into the second halt. But then coming out of the second halt, I got to be a little careful. Sometimes we do squeeze up into a third halt. After the third halt, now I'm kind of like, all right, this is top heavy. This may be a place where I can continue to hold a little bit, but I've got to be careful because they'll reverse so fast, which means people that are trying to trade this will often start shorting while it's still halting going up. So after the third halt going up, they might start shorting just as it's going up because they're trying to predict that reversal. So maybe they take a starter and then add a little more. The only thing is we've had stocks halt 8 or 9 times in a row going up. So you don't want to be too early. And if you start getting squeezed out as they squeeze up, it can be hard to get out. So after several halts going up, we often expect a halt coming back down. This can be an opportunity to go short with a stop at the high. Alternatively, after several halts going down, whether it's at low of day or simply after a big drop, there's sometimes an opportunity to go long for a bounce, like what we saw on WKHS and like what we saw in Norwegian Cruise Line Holdings. However, in the case of looking for that first halt coming back down when we've got several going up, the entry can be hard because what often happens is the stock surges and then just drops right to the halt low. Like someone just market orders 100,000 shares or whatever it is, and it just goes right to the halt level, is pinned, halted going down, and that's it. So when I'm a buyer, I usually look for a dip and a surge. However, after the second and third halts going back up or going up, they're back to back, I do get a bit conservative about continuing to take new positions to the long side unless we're seeing truly parabolic price action and or I have a great profit cushion on the day, on the week, on the month, and I can afford to take a little risk. So typically after the third halt going up, I'm starting to think about the risk of a halt coming back down. Now let me go split screen on this. So I've seen stocks open super high, and then so basically they halt going up at like $10. Then they open at 16 and just immediately drop to 12 or 14 and halt going back down. There's not a single green candle. And so what happens is the stock surprisingly opened super high, and so anyone that was in it is just taking profit off the table. So in this case, it's almost impossible to short because the stock was open only for a few seconds before halting again. And if you had shorted going into that halt, you still probably wouldn't have made money because of how much it gapped higher. However, we've also seen what we've also seen happen in some of these instances is that traders start to buy the dip, and instead of opening lower, the stock after the halt going down actually opens higher and then into a halt going up. So we've had a couple examples where we saw multiple halts going up. First halt going down, that should be a no-brainer gap down. It doesn't gap down. It opens sideways. So now what we're learning is that someone is trying to cover a short position. Someone's buying. So who's buying when it's up that much? Is it someone covering a short position, or is it someone going long? I don't know. But then on resumption, because it does something unexpected, it surges back through the high, halts again going up, and continues to squeeze. So we have seen that before. So we do have to be really careful because of that possibility of an open higher and then a dip and then a rip. So for the setup to work really well, the more halts, the better. Ideally, you'll see an entry on a bull trap or a rejection of a $0.5, a whole dollar, or a false halt off the top, and at that point begin to short. I was once caught long in a halt down on a stock around $120 a share, and I lost 40 points as it dropped down to $80. I lost $53,000 on that trade with like 800 shares or 1,000 or whatever it was. It was a stupid big loss. So the target, depending on the position of the stock, I often am going to have a bigger profit target on this, but I have to be very quick to bail out if it doesn't work. And I don't actually know if there's been any times that I've actually been able to take this trade. I have an example I'll show you in a simulator that I took it in the sim because we were doing like an afternoon some like class or something, and it was happening, and I was like, oh, let's just do this for the example. And I have some examples of the recording of it happening, but like I said, I'm not at a broker where I have availability of those shares right now. And even if I switch to one where I would, by the time they're squeezing up like that, people are so quick to borrow because they know they have to get it quick. Stop loss, typically 50 cents to $1 a share or more. Finding shares available to borrow is the biggest challenge. All right, so look at this. Duo. All right, so this stock halts going up. This isn't like that big of a thing. It goes from 20 to 30 to 40 to 50, 70 to 80 to 90 to 100 to 110, 120, $130 a share. This thing goes up over 100 points. What? 1, 2, 3, 4, 5, 6 halts going up. 7, 8, 9, 10. I mean, this is just insane. First halt coming back down was at 106. It was going into the close. Naturally, people nervous about holding overnight. Halt's going down at 106, and it opens after hours as soon as 4 p.m. The market closes at $60. Drops 40 points. Drops then down to 30 before rallying back up. No halts after hours. This was just kind of choppy price action. So had you shorted this into that halt down at 106, look at that, 40-point winner. Even with just 500 shares, that's $20,000 winner. Now again, where would you have started the short? You had a topping tail here. This looked like it was beginning to top out on that candle right there. But then it went a little higher. And by a little, I mean from $95 to $130. So it went another 40 points up. Then it rolled over here, and right before it was halting, as we were seeing all of those red prints, that would have been the place to go short. That would have also been the most epic place for a false breakout and a rip back up. Not likely, because most likely, as we know, the bulls are taking the stairs, gradually buying, and then everyone exits at the same time. And the bears take take the elevator and just boom, straight down. So realistically, the first sign of a halt down is not going to be a false halt. It will be a real halt. Here's PHUN, halts up once, twice, 3 times. And then right here opens, it dips, it does not halt down, and it surges up 4th halt, 5th halt, 6, 7, 8, and then opens and immediately drops into a halt going down at 284. Opens down here at 2, pops up to 217, and then opens lower here at 157. So this is why we have to be careful buying this dip, because sometimes that washout trade where you're trying to buy that flush for a bounce, sometimes it goes lower. So it ended up popping up and halting down a second time and then opening lower. And then it bounces off those lows. So no doubt, if you could have been short right here, that would have been an amazing trade, And most likely you would have had to have been comfortable starting to accumulate as it was going up. But then if you're starting to short, at what levels? The $0.50? So would you have shorted it 2? I don't know. I mean, if it ripped right into a halt, you might not have felt comfortable shorting into strength. That's kind of crazy. And yet, sometimes we do something a little crazy to try to be short for this kind of drop. So look at this one, wins. So it squeezes from $20 to $76 a share, which is crazy. And then big topping tail candle on the 1 minute, on the 5 minute, halts going back down. Opens way down here at 37, bounces up, does a quick dip, halts going down, and then opens a little lower, then halts going up, and then halts again. So when we're looking for the dip trade, we kind of have to expect a little bit of, we need to let the dust settle for a second on this one. On this particular type of setup, we need to let it go a little lower before we're going long. This is not really a reversal trade. Again, remember, reversal trades are typically at the low. So the Norwegian Cruise Line holdings after 5 halts going down or whatever it was, WKHS after 5 halts going down or whatever it was, those are different. They're at the low of day. They will bounce on the first halt going up. This scenario is consecutive halts going up, then the first halt going down, you're short, it resumes. Sometimes it bounces just for a second, short sellers covering, some long traders maybe dip buying or averaging down, and then it drops again as more long traders are bailing out. More capitulation, then sometimes opens a little lower before starting to gradually come back up. But we almost always, I don't think I've actually ever seen a time where we just went like this and then all the way straight back down and it like went lower. We almost always see at some point a bounce. And that bounce can be pretty amazing. I mean, it can be easily 50 to 100% bounce in this area. This went from 37 back to 60, but then halted going down again, but then did another bounce. So let's look at this live example. All right, so let me get this up here. All right, so this is RKDA. Oh, I'm in California in this video. I'm in Malibu. All right, so let's see. So the high RKDA here, so this is squeezed up from 20 to 24, pulled back right here, then goes up to 30. So this is going crazy. This is an older video. It's 2018, March. All right, let's zoom it a little bit further forward. Okay, so there's 32, 33. Now, right now, we can still focus on long. We can kind of analyze this from the long side. Yeah, I might have had a little more hair there. You can see I did have a little more hair, but you know what I have now? I've got more face. And I got that one from Uncle Steve. Less hair, more face. So the cup's always half full. All right, so there we go. There's 33.48, 33.50. This is actually easy to borrow. Funny enough, this one actually is easy to borrow. I don't remember if I actually traded it. This is a long time ago. So halting again there at this level. And this looks like it was before I had the LULD levels. So I was trading a little bit. Oh man, I'm only at 500 bucks. Gosh. All right, so there's 34. Yeah, because I don't have the LULD levels highlighted. I actually don't see them either. So that's just a... I don't see the LULD level. I'm a little confused. All right, well, let's see what this does. Okay, so we have a high there of 30. Might be that the level is too far away. So high there was about 34, 35. There's 35. Look at those spreads. 4.4 million shares of volume. There's 35 on the ask. It goes right to 35.80. So it breaks the whole dollar. Watch this break a 35. 34.99 on the ask. It breaks it. Immediately 35.80. Right there. 35.80. Now we're going to get 36. Break a 36. 37. We're skipping half dollars, whole dollars. This is parabolic momentum. We're moving real fast. There's 37. The thing is, it's hard to even see where the good entries would be on this other than possibly dips. But the thing that's a little tricky on this is that you've got big spreads and lighter volume. That's a tough combination. Okay, so here's LULD. It's at 37.40. So we're coming up to it here. So there's 36.89. Break a 37 could be a quick long. Right there. You see that green coming in? Watch this. Right there. Take some off the ask at 37.39. Oh, and here we go. We're right in the halt. See, it helps so much to have the LULD there because you can now see this is the halt level. All right, so we're going into a halt. All right, so we're halted. Prices are moving around a little bit while it's halted. That's typical. So we're showing 37.40. We're showing roughly a flat resumption. We should resume here in about 30 seconds. Oops. Okay, so watch the resumption. So we resume flat. Now remember, when we resume flat, that inherently is bearish. But there's some green. The possible long here would be the breakthrough the previous high, 37.50. Now, this is a risky place to be long because we've already had a couple halts going up. It's very extended, but let's see what it does over 37.50. Right? So it doesn't break it. Not yet. Let's look at that again. Because this would have been a tempting place. I can definitely see why this would have been a tempting entry right here. So it's going to open. Possibly a dip right there. Possibly a dip at 35.81. Then an add over 37. I'm thinking add right here. I'm seeing that green print at 36.83. I'm thinking that that's an add right there. That's an add. Gosh, I hope I'm not wrong. I think, but oh, that feels like it might break. Uh-oh. So now we've got 35 on the bid. Oh no, 34, 33. Oh, and see, look at this. Now we're halted going down. There's the LULD level. So on this one, I was wrong. On this one, we were just a little too top heavy. And you know what? There were some prints there, but just not quite enough volume to pull it kind of through that level. 37.44, there were some buy orders that went through there. But in practice, I didn't end up taking this trade. So maybe today I would have, and I would have lost on it. Because right in there, that green 36.55, that's that spot where I'm thinking, man, that's a dip right back over 37. You know, today, this type of stock probably would have gone. Maybe, you know, we're in a hotter market today than we were there then. So LULD is down here at 33.70. And now it's halted going down. And I'm short. I shorted into the halt going down. So I put the sell order. I say, you know what? I'm just going to go for it. Sell order, 32.90. So that's below the bid. I press the short. Now my order's sitting there. Will I get filled? I will get filled. I put out a sell order. I will get filled if someone presses the buy button. If someone buys shares, I will get filled. I may not be first in line, but I could get filled. And there I've got 170, 226. And it looks like we're halted. So I'm short 226 shares right there into the first halt going down. Stop, high a day, 37.50. Now we're showing a 32.84 resumption. So let's watch this. Resumption coming up here in about 5 seconds. So this is that, I mean, this is a pretty good setup. I will say that it's not as stretched out as it could be, to be honest. And I'm short at the very bottom going into the halt, and it's not a topping tail. So I'm short, well off the high there. But let's see what we get. So I've got my hand on the buy button for half ordered, 113 shares at 32. Watching resumption. Okay, so it looks like we've got a 10-minute long halt. First halt going down 10 minutes is very common. Oops, let's back that up. Okay, so here we're getting our resumption in about 5 seconds. There's 31.13, and it's green right now. I cover half. I think I cover half at 32. Yep, covered half right there, which is typical. That first pop is a little bit of short covering, right? First pop, a little bit of short covering, and then, it sells off from there, back below 30. Let's see if it does break below 30. Now I put in for 75 shares. I covered a little bit more there, I think. Now I'm at 38. Notice I'm having to type these manually. I didn't at the time have hotkeys set up for covering a short. Looking nervous about first 1 minute candle making new high and a pop back up over 32. So stop would be at 32. Yep. Covering it there. And I actually got filled right at 32, which is great. Then it starts to pop back up. So, and this could go back to 34, could go back to 35. This could end up forming a bull flag. This didn't end up gapping down all that much. It wasn't quite as extended as some of the others we've seen. Okay, so that's actually the same one, and then this is a different one. Let's see. Just gonna move this up here. All right. So here we have LTRPB. All right, so this is LTRPB. So this is basically just squeezed up on really light volume from 10 to 15 to 18 to 20 to 25 to 30 to 35 to 40 to 45 to 50 to 60 to 65. So we're halted on 117,000 shares of total volume right here. I'm drawing for you the last print, which was 32. So we're waiting for resumption on this. And let's watch this here. So, oops, let's back this up a little bit. All right, so where's the resumption? I can't see the time. Oh, okay, so we should resume right here. Okay, so it resumes at 70. And I'm thinking short bias. I'm like, okay, this is strong. First halt going down is at 60.43. And I'm like, okay, I'm going to try to start taking a short position. I'm going to have to scale into it. So hands on the short button. The volume is so light. There's 72.50. So I shorted right there. I actually meant to be in at 72.50, but filled at 70.49. I was thinking that what's going to happen is it's going to open and it's just going to halt immediately going down. But here it actually halts again going up. I've got 100 shares short. So now we're halted, so showing 77.85. Okay, so let's move this a little bit further forward. So 38. So it's a 10-minute long halt. So watching resumption here. We now have 124,000 shares of volume. This would be certainly hard to trade long also, just because it's kind of so crazy. And look at this. There's 79. There's 84. So we've got right now a 7-point spread, 78 by 84. So I put the order at 84 to try to short at the very top. That would be 15 points higher than my initial entry, but that would bring down my average cost up. So I put the order up there. We're seeing orders going through, volume's coming in. It's now 135,000 shares of volume. I mean, it's still relatively light, but we're seeing more volume come in. Uh-oh, there's 85, and the halt level moved up to 190. Oh my gosh. And it breaks. It breaks 85. There's 90. There's 89. Now my average is 78, and I mean with 300 shares, I'm down 3,000 bucks. So I am shorting as it's going up, and you're gonna see why this can be a recipe for disaster. Okay, so there's the halt at 90. Now we're showing $100. This really happened. I'm in the simulator trading it, but the trade, in terms of like the stock, the price action of the stock, this is what happened. Okay, so, oops, let's back that up. It's very hard to get out during halts. It is very hard. When it's doing this type of stuff on very light volume, it's very hard to get out if you're short. If you're long, it can also be hard to get out because you've got to hit the bid. And when you've got a huge spread, I mean, this is hard because the volume is so light. It's up 1,800% on 143,000 shares of volume. Okay, so we're looking for resumption here. Here's resumption. There's a 5-minute long halt, and look at that, I'm down $20 a share. There's 95, there's 98. Is it going to break through 100? Dip and rip. Right here could be a long for the break of 98. There you go. Order would be on the ask here, or with maybe a 20-cent offset below the ask to try to fill. And there's orders going through at the high of 94 for 104.94. I added a little more. Now I've got 87.49 cost basis. And it's halted again going up. All right, let's back this up for 1 second. So now you've got 150,000 shares. We're showing a possible resumption at $149 a share. This is where it's just like pure panic. If you were actually holding this short with size. What is this? Just looking at something else here. Okay. So I'm holding, okay, so it looks like I'm holding 700 shares at 91.92, and we're showing 150 on the resumption right now. So looking for resumption. It looks like this is gonna be crazy. So checking the halt codes. We're still halted. There's resumption, 129. Look, I'm down $42,000. Look at that spread right now. You almost are spread with the bid halt down 110, the ask halt up. I don't think I've ever seen that. If that 118 goes away and we have a full spread there, halt level on either side, that would be a first. Okay, so this candle is looking red up here at 129. Halt down is 110. Uh-oh, there's 129, there's 115. What's it gonna do? Is it gonna halt down or up? It could go either way, but that's the biggest red candle we've seen so far. So it's starting now to look like we're getting a little more confirmation. So in this place, this might be a spot where you would feel more confident selling. And there we go, halt level. Okay, now we're right at the halt level, and now I'm adding. So now I'm adding to it right here, going into the halt, going down. Because now this is not, the tricky thing is, you see these orders going through at 120, 115. So is it gonna halt? And it does halt at 113. Okay, so it's halted at 113. The high there was 138. Realistically, I don't know if I would have been able to fill that many shares, but in any case. So now it's halted for the first time going down at 113. I'm down on the trade 20 plus thousand, but I was down as much as 40,000. We're showing a $94 resumption. Now we're showing a $37 resumption. Now we're showing okay, look at this, look at this, look at this. Look at this. Back to 22. $213,000 in the simulator with a 3,000 share position. Wow. That's crazy. That is crazy. So, realistically, that's probably the most extreme example that you'll ever see. And what you saw in RKDA was certainly a little bit more subdued than that. If we look back at LFIN, or no, I'll have to pull up the chart. Let me pull up the chart here. So that was LTRPB. So hang on, let me just grab the chart on this one. LTRPB. So on that day, I don't know if I can go back, but so it hit a high of 138 right here, and then it closed after hours at $34. But it actually did move up, and the next day it hit a high of 100. So it did come back up. But yeah, so again, I would say that is an example of sort of like the most extreme, and a lot of these others are going to be a little bit more subdued. So PHUN, so on this one, actually, this is just showing you really. This is after the fact. It shows you, though, that halt down, second halt down, and a big drop. So a similar setup, and in this case, a 50% drop. So 50% drop is not uncommon with that setup. So that was that one. And then, let's see, then we've got parabolic on BPTH. Okay, so we're going to look at this one next. Hang on one second. Let me just grab it from up here. Copy. Okay. Yeah, the PHUN one, the recording is starting a little bit too late, but that's okay. All right, so here we have BPTH. All right, so halted at 47. Squeezes up, and we've already looked at this live example. I think we talked about this in the parabolic momentum chapter. So halting up at 54, I mean, this thing just goes crazy. I think it goes up to about 70. There's $60.50. So let's watch it. Let's go right into kind of where it topped out. Okay, so now we've got the top. So let's back this up here. So what happened between these, like 2 minutes? False halt going up, that's right. That's right. So on this one, it's squeezed. Now it's not easy to borrow, but it's squeezing up. Halt level is 73.52. Now, could there have been some type of daily level that we could have used, as this is a possible this is a possible area to be short. And honestly, on this one, I don't think so. I think on this one, and these are so, so strong, they will blow through daily levels. They'll just keep going. Like they don't care. So realistically here, you've got 73.52. It looks like it's gonna, it looks like maybe it's about to halt. So right now, I would kind of treat $70 the same way as I would treat a whole dollar. Because if it breaks back below 70, it's going to have a similar psychology. This is a higher price stock, but if it breaks that level and it can't get back above it, then that's where we've got a problem. So watch right here, and all of a sudden it starts to kind of falter a little bit, starting to show indicators of a false halt. Now remember, when I'm looking at a false halt going down, this is what I look at. When I start to see this, that's when I'm like, buy, 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 right? I'm pressing the buy button on that because I look at that as it's starting to show weakness. And after a strong, or it's starting to show strength in the case of after several halts down and then it's pinned down, or it just flushed and it's pinned down and then it starts to, it's right here on the bid. In this case, it's on the bid because the bid is stacked for a second right here. And then right there, it dips down. So now the 15-second timer starts over because the bid dropped below 73.52, the halt level. Halt, now it's going to start over again. The bid just dropped to 72.36. Now it's back to 73.52. The 15-second timer has to start again. So when I see it doing that, I'm starting to think we might have a false halt. Now, if the stock wasn't already this extended, I might be thinking, okay, let's give this a second to see if the halt level jumps up. Maybe we can get a dip and a long, but in this case, it's already so extended. In the case of trading a momentum stock, when it flashes down and looks like it's about to halt and the bid is, the ask is getting stacked up on the ask because it's going into a halt, and that starts to thin out only to 1-1, or it pops up just for a second, that's when I'm starting to punch it. It's aggressive. And sometimes it does, in this case, it could, with 100,000 share market order or whatever, I don't know, with, if enough big orders, this could go right back to 73.30, get halted going up. But ultimately, for it to continue going, people are going to have to be willing to keep stepping up to the plate. So right there as it broke that level, that's the obvious place to exit. False halt. This is clearly a false halt. And now we're getting confirmation right there. And it happens so fast. So on a stock like this, you're probably not going to be shorting 10,000 shares of it. It's already 5 points off the low. Would you maybe short 1,000? Your risk is $5,000. I don't know. But let's just say you did. So you're short 1,000 shares at 67. Right now you're holding, and now you're like, okay, I'm in the driver's seat. Could you take half off the table? You could. And why would you? Well, on the one hand, you're lined up pretty well. The ask is stacked up. We're definitely halting going down right here. It's not giving any indicator of a false halt. So I would not be buying this dip. And realistically, after this move up, this is probably going to gap lower. But there is a risk that it could open flat. It could even gap up a little bit. And if it did, that would be very bullish. And then we could get a squeeze. So if I had on this position huge size, I might take some off the table right here, up $7 a share. Like if I had 10,000 shares, I don't know, it would be tempting. But on the other hand, it might be tempting to hold the whole thing because if it opens down at 40 or 50, that's a huge winner. So let's fast forward about 5 minutes. Let's see, this might be a 10-minute long halt going down. First halts going down often are. So watching for resumption here, we're showing 55 by 60. Hand would be on the buy button here as a dip trade for me. Also thinking about possible short covering, but this would be risky even as a dip trade. That's why I only have 500 shares. Okay, so no resumption yet. It looks like we're going into a 10-minute long halt. Yep. Okay, so 10-minute long halt. So fast forward another 5 minutes. And it looks like we're going into a 15-minute long halt. Okay, so here we go, 15-minute long halt. Remember, the longer the halts are, the bigger they gap. So long halt, if you're short, is great. Oh, look at that. If you had 10,000 shares, you'd be up over 200 grand on that. Now, that's a big trade, 10,000 shares, no doubt about it. That would have been a $670,000 position, but you're up 30%. Look at that. Second halt going down. And now I would definitely be taking a little off the table. I even tried to do a dip trade there, but I don't get filled, which is actually just as well, I think. So right there, we have a hidden seller at 50. There it goes. It breaks through it. 51, 52. I would probably sell from that dip. First candle to go green. Halt level going up, 55, 56. There's 54.70, there's 55, there's 55, 56 going into the first halt, coming back up. That's why you want to cover before that happens. So that was a great example, and this one would have been much easier to trade and arguably much safer to trade than LRTPB. The volume was higher. We've got 23 million shares of volume. The entry was after a false halt, so this would have been something that would have been easier to trade. However, then this is a problem. If you're depending on this strategy, if you're like, this is my strategy, this perfect setup unfolded, what if you couldn't get shares to borrow? Because the thing is, this was already squeezing from the previous day. So, I mean, who really knows how it works? But some of these big brokers, they don't have a lot of shares available to borrow, and maybe they give them on a stock like this, they give them to some of their best traders. They want those big money traders to keep trading with them. And so maybe they're like, hey, I'm going to just go ahead and reserve. I mean, I guess I could go undercover and try to find out. I could be like, hey, my name's Ross Cameron. Why don't you just make sure you always have 1,000 shares of the biggest Momo stock set aside for me? And would they do it? I don't know. Maybe they wouldn't. Maybe they would. I don't know. But I think as part of retaining good traders, active traders, there's a chance that they would, they would have some kind of, there might be some preferential treatment. And I don't know, but all I'm saying is that there have been days when I had accounts that were at brokers that would have a good availability of shares to short, and I thought I was logging in early, and they were already gone. And I was like, what is the deal? Well, maybe it was just they didn't have any shares available to borrow, and I don't know. Maybe the other people got it first. But the problem is that you're dependent on the broker to give you shares. And when you trade at the long side, that is just not a problem. It's just, there's enough stuff for us to worry about in trying to be a profitable trader without that added issue. Okay, so with that, I have one note on this slide, steps you can take today. A reminder that parabolic stocks can be extremely risky. If you start chasing these, either long or short, they could go the other way very quickly. So if you're going to start shorting, you better keep tight stops. If you don't think that there's traders out there who have lost millions of dollars shorting parabolic stocks, you'd be wrong. There are traders, investors who lost billions of dollars on the GameStop short squeeze. Billions. I believe it was 12 or 13 billion dollars, something like that, at one point in total losses to the short side. That's crazy. That is crazy. I mean, think about how much money that is. 16 billion. So 16 billion is 16,000 millions, right? That's a lot of money. You think about 1 million, 5 million, 10 million, 100 million, 500 million, 700 million, a billion, 2, 3, 4, 5, 6, 7, 8, 9, 10 billion. So just be mindful of that. And as always, don't be a follower. Don't just blindly follow what I trade or what anyone else is trading. You've got to understand the strategy. You've got to practice this in a simulator. And it's certainly confirmation if we're looking at the same stocks, because generally each day there's only a small handful that are really worth watching for momentum. But I don't want you guys just blindly following me and thinking, oh, this is going to be easy. I'm just going to chase this stock or, this or that. All right, so I just wanted to have that kind of disclaimer there, especially because these parabolic stocks, trying to short into a halt going down, that's some risky stuff. Okay, so let's continue on now to chapter 10, setup for shorting bear flags.